Welcome to the Three Edge Week in Review for the week of December 13th. I'm Fritz Folts, the Chief Investment Strategist at Three Edge, and joining me here today, once again, is Steve Cucchiaro, Chief Executive Officer and Chief Investment Officer here at Three Edge Asset Management. Today, Steve and I will be discussing how the onset of inflationary pressure throughout the economy may have changed the rules of the game for the Federal Reserve's monetary policy and what that could mean for the global capital markets in 2022 and beyond. And this is a particularly timely topic since it comes on the heels of the meeting this past week of the Federal Open Market Committee. Before we get to today's topic, we'll take a quick look at recent market activity for the past week. And the big news in the markets, no surprise, was the December FOMC meeting. And at the conclusion of the meeting, the Fed announced that in response to rising inflation, it will speed up the tapering of its monthly bond buying program. And it even laid out a potential path to 3 increases in short-term interest rates in 2022, beginning as soon as next spring. The markets had anticipated the Fed announcement and its pivot towards tightening to address inflation concerns. But it's important to remember that it was not that long ago when investors were debating whether the Fed would raise short-term interest rates at all in 2022. So Fed thinking on monetary policy has clearly shifted. In addition, it wasn't only the Fed that shifted towards tightening. In the UK, despite cases of coronavirus rising rapidly, on Thursday, the Bank of England became the first of the world's major central banks to actually raise short-term interest rates in an attempt to rein in inflation that has risen well above target. And in addition, also this week, the European Central Bank, the ECB, announced that it would scale back its pandemic-era bond purchasing programs. Investors are also dealing with what looks like another winter surge in coronavirus, as cases in the US, for example, have increased by over 40% over the past 2 weeks, and deaths have increased by over 30% during that same period. Also, many major Wall Street firms now have told their staff to return to working from home. So let me bring Steve in here and get into the conversation, and let's get our underneath topic for today. So Steve, so this week, as I mentioned, we saw that, at least for now, the Fed is pivoted towards tightening of monetary policy. And so has the onset of inflation and the possibility that inflation will prove less transitory than at least originally anticipated now, has this changed the rules of the game for the Fed? And what does that mean for the markets and for investors in 2022 and beyond?
Over the last 3 decades, whenever the market or economy went down, instead of letting the marketplace self-correct naturally, the Federal Reserve Board intervened, propping the market up with monetary stimulus without worrying if inflation would result, because inflation has been so quiescent over the last 3 decades. However, now inflation is higher than it's been in 39 years, and more persistent and more broad-based than anyone, including the Fed, expected. And this might change the rules of the game. This might prevent the Fed from riding to the rescue during the next downturn, whether it's an economic downturn or a market downturn. And that's a major departure to what the markets have counted on for so long and what investors have been used to. So I see the potential for all this market euphoria and greed turning to fear if the Fed isn't there to protect them.
Excellent. So as we know, if we look, looking into 2022, there are many, many wild cards out there, the things that we can, that are uncertain that could impact the markets. But I think one wild card certainly is going to continue to be the global pandemic. And, particularly now, it looks like we're going to have another winter surge of the virus. And we have the spread of the new and seemingly more transmissible Omicron variant. So, it seems like this definitely could get a surge in the virus again, and that could negatively impact, global growth and maybe even exacerbate inflation at the same time. How should we think about that? And what effect might this have on the Fed as we get into 2022?
Well, if the economy slows either because of Omicron or because many central banks around the world are now beginning to tighten their policies or for any other reason, This could put the Fed, as you said, between a rock and a hard place, because do they fight inflation as they came out and said they would, and accelerate their rate hikes to fight inflation and then risk the economy slowing even further? Or would Omicron or other evidence that the economy is slowing, would that make them drag their feet on raising rates, as they said they expect to? And then would that cause inflationary expectations to become even more deeply embedded? So if you take Omicron and inflation together, that equals stagflation. That's driving stagflation, which is lower growth, higher inflation. And what we learned is, in the last time we had stagflation, it was the 1970s, we all learned that it was a good time to diversify away from overvalued stocks and bonds and into undervalued equities, real assets, and treasury inflation protected securities. And that's what we're advocating and doing for our clients right now.
Excellent. So going to be an interesting 2022 as we see if this regime shift really takes hold, which is entirely possible. So great, Steve, and thank you. And as a programming note, since both Christmas Eve and New Year's Eve fall on a Friday this year, we will not be recording our 3Edge Week in Review videos over the course of the next 2 weeks, which means that today's video is our last for 2021. However, Steve, Eric, and other of our 3Edge colleagues look forward to picking up with our 3Edge Week in Review and our 3Edge View from the Edge videos in January of 2022. But Steve, before we sign off this year, I'd like to give you the final word.
So the famous investor Warren Buffett once said, "Be greedy when others are fearful, and be fearful when others are greedy." And given all the signs of market euphoria that we see today, I can assure you that the team here at 3Edge will be laser focused on navigating the wind shifts during 2022 and working hard to protect our clients' capital going forward. And so I want to thank you for your support and confidence. And on behalf of everyone here at 3Edge, I do want to wish you happy holidays and a prosperous new year.
Very well said. Thank you very much. And that will do it for us, and we'll see you next year.